Hey everybody, welcome to this Friday's market update. We've got a lot going on in the markets here, so why don't we go ahead and dive in and we'll jump right into the charts, shall we? Awesome. So I'm just going to dive into the monthly here a little bit, and I'll turn off the camera so that you guys can see the charts. Just wanted to give you guys a quick wave hello. So let's jump into this because the markets are moving and had some sort of non-news driven drop. Looked around today, nothing really happening. We'll get to the technicals because I'm a firm believer. Show me the charts and I will tell you the news. So really nothing, nobody knows what's going on. Sudden market crypto drop sends Bitcoin below 22,000. There's a sort of technical setup that would indicate that. And sometimes that's all it takes. Crypto stocks retreat on Bitcoin's dip on macroeconomic concerns linger. Who knows? Lots of FUD out there all the time. And so we're not going to dive in, go down the rabbit hole, just jumping around some headlines. And this also showing the Bitcoin chart indicating that, this is all in the technicals of the charts as well. So anyway, I did find it interesting, however, that Chinese mining giant doubles profits despite the blanket ban on crypto. So anytime China loves to ban crypto, probably nearing 100 times that they've done that just to spook the markets. Meanwhile, they're mining away. So with all of that out of the way, let's jump out of the news and jump into the charts here. So on the monthly chart, we've been following this, and the thing to zoom in on, and actually if you're new here, I'll just show you by turning off what we've been watching in terms of the bear market cycles here. So in terms of what these boxes were, I'm just going to turn those back on actually. And the last three market cycles, if you would like to go deeper onto this, just look at prior videos on all this. But what we're looking for potentially is that this could go much lower based on the prior market cycles. Okay, so back in 2014, total drop 86%. In 2018, total drop 85%. And so if history were to repeat itself, we've got some more downside here, potentially down into this range. And this green line here is let's just double make sure here, it's the blue line is the 50-month moving average. The green line is the 100-month moving average. Now, it hasn't been around long enough to have ever come down and touched that. So we'll look at some other ones on the weekly basis. But if we do get another push down on price, that could push us down to this range right around 14,000, 12,000 to 14,000. And we've been talking about this 12,000 range because this would correlate with the 300-week moving average. So we'll kind of jump into that next. Certainly still in the cards, we had dropped down below the 50-month moving average, had last month the bullish retracement here. So really we want to see, how does August close? Very important, this candle. And if the candle closes at or below the prior month, then that sort of negates the prior month bounce, and that's a bearish engulfing candle, which would indicate further downside. There's really nothing propping this market up or fundamentals to keep it going higher. The push we saw, we'll get to this in a minute, but the ETH merge that's coming up in September, now since the testnet, the Gorlin testnet merge was successful, it's being scheduled for mid-September. So if that goes off without a hitch or not, either way, I think it'll be a sell the news type of event. So we're kind of in a waiting game and really want to wait and see how this plays out. So I want to get to the sort of specifics here. Don't look at all that. I'll hide this as much as I can. And what we're looking at here is the weekly chart. So we look at this. I looked at this last week. Let me turn off some of the things here we're not going to watch all at once and turn off some of these drawings. Okay, so just without anything on this chart, on the weekly chart of Bitcoin, we now have a bearish engulfing candle. So this, as the name would imply, is bearish. If this candle, if you're new to all this, is engulfing the prior one, which it is, and we close at or below this 200-week moving average, that's bad. Okay, so we would then be looking at potentially the drop down to the 300-week moving average, so that roughly that's right in this range, around 17,000. For some reason, it's not showing up on my chart. I do have it on here, but it's not showing up for some reason. So I hand drew this as best I could, but this is kind of a target zone that we would look for. Also kind of down into this lower zone. We're still very much in a downtrend. And as you can see on this, we're having trouble keeping above the mid-range of this this zone here. All right, so what would be the worst case scenario? And we've been watching this here. You know, this a couple things to talk about too. You know, the S&P, if we were to look at that, not sure we have time, but in the last cycle where we saw a similar type of pattern on the S&P, it dropped considerably lower. So we do want to keep open the possibility of this range down in the 10 to 12,000, 10 to 14,000 range. So it's a wait and see game, and just jumping out here into some of these other indicators that we follow. And let's just look at a MACD. It is kind of breaking up above here, but it failed back here on the prior cycle here back in April, March. So I want to keep an eye on that. It is pushing higher on down here, but you can see this also failed at this level here on the monthly. Just to jump back on that, I don't usually watch MACD on the lower time frame, but this has some room to go down still, much like we've been saying to get out of these markets back in January, as early as back in November. So let's jump over here. Sorry, I'm going fast. Just want to cover a lot of ground here on this week's episode. So in this case, this is the daily chart of Bitcoin. This is where I'll slow down a little bit and we can take our time. All right, so a couple things to see here. In a very basic sense, what we saw is a return back to the midpoint of this big red candle here. Oftentimes, and these are sometimes called vector candles, but oftentimes on these big up or down candles, price will go back to revisit the midpoint. So back here, the big drop, price came up to this midpoint and then resumed its direction. So the fact that we're rolling over here is also bearish. I got to the midpoint, tried to break it here, and then briefly above here, and then we're breaking down. This is a wedge pattern that typically does break to the downside. And so largely this was an attempt and a failed attempt to get back above that area. And for the 21-day moving average in orange to get back above the 50-day moving average. So I would imagine the market makers were successful in bringing a lot more longs into this market. People margin long in this, breaking above here. It was looking like it was going to break above, and now they're just liquidating all of those longs. And so it's sort of a fake out and not sustainable breakout for sure. So as of yesterday, I was saying that to some people I was talking to that I think we do head lower, and certainly this is exactly what happened. We saw the 21 break down below the 50, or was heading that way. And we had a big sell-off today, down 2,000 points, give or take, but bouncing a little bit off the lows. So we'll see what happens in the weekends. One thing I'll point out is the big traders on Wall Street are all, for the most part, away, out in the Hamptons, not trading. So this next 10 days should be it's sort of suspect. And so typically, traditionally, the big traders come back in September, and then they kind of move the markets back to where they think it should be. The volume is decent, though. It's holding steady, so it's not, we can't discount this price move. And if I were to put some of these lines back on, let's see, I put them over here and show you what else I've been watching so that this circle might make a little bit more sense. So in terms of this, I'm just going to put the triangle away here and going to put back on these bull bear boxes I had drawn last week. So essentially we were watching these levels. If we could break and close above 25,000, right around 24.5, that would have been bullish, but we did not get a daily close candle back above that range. And you can see I had an alert here set at 25,000. It did trigger the other day. It triggered right here, and I ran to look at the chart and saw it immediately sold off. So that was our first sign of weakness. And then I put the alert back on. Had we been able to close back above 24,000, 25,000, then I would suggest that I would have forecast we'd go up to around 32,000 before rolling over. Resistance area back here, a break above 33,000, then it was off to the races, probably a clean run up to 43. But there's, with everything going on, didn't expect that, really expected this to drop as it is. So this is kind of what I expect. We see a kind of drop down to these levels. And this is maybe should be here. See if we hold at this prior low. All eyes are going to be here. There are some indicators that, based on past experience, that we have put in a low, but that doesn't mean we can't revisit it. And it also we've never been in this type of recession slash possible depression scenario. So we can't rely on prior cycles for the answer. And that's certainly possible. Again, we go down in this 12,500 zone or down in red. Some people are saying 14,000. It's a big question mark at this point. So let me hide the bull bear boxes here. And what I want to share was one more thing. Let's see, in terms of the EMAs, we have those on there. But well, I think that really tells pretty much what we want it to look like. The trend lines, this is what I wanted to show. You know, this, where would we go? Okay, that's why I had this circle here. Possibly hold here. This is a line in the sand. We'd want to see this hold right around 20,000 for obvious reasons, psychological support, rising trend line here, higher lows. Very important we hold these higher lows. So where would I be saying probably want to take some profits or take some stop losses here? If we break and close below this 20,000 mark or this line here, then most likely headed lower. So keep that in mind. And so let's kind of take a look at one more thing here. Some of our proprietary indicators also were showing that we were heading lower. Our early reversal indicator showing and triggering a red arrow right there. So that was another reason I was suggesting we're going to turn this thing down lower, as well as our trend strength indicator rolling over from green to red, so sort of an oscillator type and indicator that we've created, and our signal has turned from green to red. So all of these indications going lower, and that's on the good news side, kind of getting down toward the lower end, but can't rely on a bounce just yet. We'll be watching those for them to give and trigger some green arrows. So at any rate, so let me turn that off, and we can dive over into some other coins, take a look at the overall indexes. But I want to look at ETH and then ETH dominance. ETH dominance was rising higher as everything turned down. So ETH has taken a bit of a pullback here. Also looking, it's back below its 21-day moving average. Really important that it can hold above these. And so we'll see going into the weekend. If not, then I'd be looking to ETH come back down in these ranges around 1,200 ETH and possibly down even lower. Depends how bad things get. So let's take a look at ETH dominance. ETH dominance is hitting, not surprisingly, and I had drawn this last week, hit resistance here around 21%. ETH dominance was going higher as you might expect. Bitcoin dominance going down. Now look at this, Bitcoin dominance having a pretty big sell-off here, almost into alt season zone, but that doesn't mean we're going to see alts go higher. This is where Bitcoin kind of leads the market. In terms of USDT, now here's the concerning chart. USDT broke down below its support. I guess that sort of depends on how you draw the lines here. So let's just redraw this and see. I don't want to draw lines in the sand. That doesn't really work. But what is concerning is USDT is pushing back above its 50-day moving average. So that means money flowing out of crypto into USDT is bad for Bitcoin, bad for everything else. So we really want to see where we close here end of the day and going into the weekend. If USDT starts to fall off, money's flowing most likely back into Bitcoin and Ethereum. But this is looking a little bit concerning here. And again, this is the inverse trading of Bitcoin and crypto, and these are looking bullish. My custom indicators here, the early reversal indicator, just a couple days ago, showing this is early, going to reverse higher, followed by the TSI trend strength indicator going red to green, and our signal line. These are, by the way, these are in-house, and so this is what we use, but unfortunately, you can't find it on anywhere. And so at any rate, in that regard, that's what we're going to watch for. DXY also pushing higher, and we want to keep an eye on that, but looking as if it will continue to push higher based on some things I'm saying down here. So that means more downside for crypto, most likely. We are still holding above the $1 trillion mark. Sorry for the spaghetti here. It's what I was trying to show here is, let me just turn off all of this, is that these possibly at inverse head and shoulders forming, which would be bullish if this right shoulder could form, but total crypto market cap selling off. It's looking like we're going to dropping back down below this 50-day moving average. Guys, I think we're looking at a more deeper sell-off here, to be honest. And this is, not financial advice, but it is a warning to be careful of, because these are the two scenarios. This being that right shoulder doesn't look like we got there. So in the bearish scenario, as I draw last week or so, is this is sort of more likely scenario that we kind of drop down and head lower, and possibly down to these lower ranges. If you're in cash, that's good news. Time to pick up some inexpensive crypto. I would personally be looking to, I'm looking for a $500 to $600 Bitcoin. Sorry, not to give you guys a heart attack. Ethereum, $500. $600 Ethereum, that's where I would be buying and going all in on my IRA. You can see my buy zone here, and may not get there. We want to watch this. Certainly back down around 1200 could be the bounce point. So I will kind of rely on our indicators to see when markets are looking like they will reverse back higher. So it's not really worth looking at much else in here, because it's a bit of a bloodbath here, understandably. So this is why I always recommend having stop losses in place, and so that you don't get burned. This, was looking strong here. We had a cup and a handle forming on Polygon. It was breaking up above it. That's why it's so important to keep the macro scenario in mind, because this was technically starting to look like a breakout, a cup and handle breakout, and the rising 21 and 50-day moving averages looking good, except until it wasn't. And so Bitcoin will lead the market. We're dropping down below the 50. Probably a good idea. In fact, it is a good idea. Have some reasonable stop losses in place. If it were me, I would be looking at this level here, just below the bottom here, which is about 72 cents. Maybe call it 70 cents as an emergency stop loss. Again, not financial advice, but in terms of educating, if we break the recent swing low, then most likely it's going to continue to drop down lower. So these are all going to look pretty similar, I would imagine. Fantom coin, Fantom, great coin long term, but this is looking bearish. These rolling over. Now, I had drawn a sort of mock entry. So in this case, good to use these. Let me move that out of the way. This trade where you can put your target and then your stop losses. So I had drawn the stop loss below the swing low back here. So this would have been stopped out. And that's why it's good to use this tool in TradingView, where you can do this kind of thing, and always look for a 3-to-1 ROI is my general rule. This was a 6-to-1 ROI. Can't win them all. It was looking good, but it was very cautious trade setup, and not a recommendation, but a setup. And here, this is really sort of the buy zone on Fantom coin, going all the way back here, but a pretty loose one. So if this is the case, and if our trend line is now breaking down, what we want to watch for is a sort of new trend line on the downside, and that would be an indication of kind of where, if it breaks to the upside, where to possibly look for the bottom, the great white buffalo. Where is it? Has it been seen yet? We don't know, but this is looking fairly ominous in terms of, if it doesn't hold here, yikes, Fantom coin could lose another half of its value here. If Bitcoin falls another 50%, the alts are going to get murdered. And it is disappointing, to be honest, but not entirely unexpected. Had some nice charts setting up here, but these were really looking weak for the last few days, and so not a lot looking good here. I'm looking for some signs of strength, but this is a good time to draw your channels and really sort of see and make notes to yourself. That just said buy pullbacks. I've deleted that because I don't know that this is something I want to be trying to catch a falling knife on, but I have alerts set on areas where I'd like to own some of these. And 99 cents at $1, Cadena, some projects that have a revenue model, and I like, and I'm watching. So again, I'm just looking at all of these. That's the really key, the 21 and 50-day moving averages, the exponential moving averages. The orange line in the 50 is the green line. So in contrast to a bullish market where the 21 breaks up above the 50, So this was a great run here, and this is what we're all watching for, or I'm watching for, where we could have seen a push up, say about 400%. Tried to back in here, then failed and saw a much bigger drop. I mean, let's hope that we don't see another indication or episode of that, a 70% drop. That would be horrific for these projects to see another 50, 60, 70% drop on these. So it's it's a good time to be in cash. If you're holding on to some projects and hodling on some of these, it would be prudent to still have some emergency stops in these ranges and below the local lows here, because if these break, so look at this support zone back in here, where if we see that kind of break down, where's the next one? Back in here, we've got another liquidity zone back in here, and I might, maybe make these green as possible entry points, but look, these things went up so high back in the bull market. Could they revisit those lows? Sadly, they can. These bear markets can be brutal, and we want to be kind of careful and have your emergency stops in place is my recommendation. And you can also use other services that keep those stop losses off the books, or if you're using something like a regular Coinbase where you can't set stop losses, there's a service called 3 Commas that'll kind of allow you to connect it through an API and set your stop losses there so they don't actually sit on Coinbase or Gemini and that sort of thing. Highly recommend that, not financial advice. Do your own research. All right, so this is looking very weak on all of these guys. Okay, Rune again, also reverse head and shoulders has now been invalidated, so we'll take this off. Had it broken to the upside, possibly gone up to this point, but all of this is now moot, as they say, and looking for some reasonable patterns. There aren't any. So this is looking pretty ugly out there, guys. It's not, I'm not gonna lie, and everything's rolling over. So we need to really see how the weeklies close on this. And this is one here. Let's see, let's look at a little bit more of a solid project, but all of these, they're gonna get crushed here. The gaming, metaverse, things that don't have earnings or really the potential to make money for a long term are gonna get hit the worst, in my opinion. But these are all sort of in their trading channels and zones. This cup and handle sort of broke up to the upside. I'm just going to take these off because they're invalidated. And so if you're in something like a basic attention token, where's your stop loss, which should be right down here below the local swing low here as this, because if it breaks down below this 35 cents, probably going to go back down into here, possibly even much lower because of these trading zones. You can draw these with trend lines or with this neat little parallel channel tool. So if I do that, oops, not like that, and come down like this, you can see how this thing maneuvers. And so it's and can project out in the future. So where could we see BAT down to 16.5 cents in this channel, which would be a probably pretty good long-term buy area. So again, not financial advice, but I'll put in my notes why. So again, in the bear market, let me just say this: in the bear market, typically if you're okay for holding for a few years, this in the last cycle, 2018, the biggest gains were made buying the depths of the bear market. Problem is, we just really don't know what those depths may look like in this type of market and drawdown here. So what I'm going to do, actually see if I can find a chart, because I want to share with you guys something that is looking fairly ominous, and I should be aware. So here it is, and it's on my other screen. So let me just pull this over. Okay, and this here. Okay, so with this is a image of the S&P that I mentioned earlier. On the left is the 2008. Sorry, on the right is the 2008 S&P. To the left is our current chart pattern. So 308 bars since the all-time high in crypto. See this? Maybe I won't zoom out. That's a bit hard to read. But in the same instance, if we draw a trend line here, that's where we are, okay? And then previously in 2008, before the mega crash, the same thing sort of happened. 318 bars from the prior high. And if we draw a trend line down through here, that was the beginning of a massive drop in capitulation, a dead cat bounce, and this is some capitulation, dead cat bounce, and then just the bottom fell out. So I want to alert everyone to this, because not to spread fear and doom and gloom, but this is a fairly ominous visual of where we could be in the scheme of things. So take that to heart. I would advise certainly having emergency stops in always, and keep this in mind. Okay, so I'm going to go ahead and close this, get this out of the way. And if with that, probably there's not much more to say, guys. I want to wish you everyone a good weekend. And, just if you take anything away from this, actually, a couple more things I do want to look at. A 4-hour chart on Bitcoin, just zooming in on this. Now we are still in a bear flag pattern. Okay, so this is something that if we see play out, this is the flagpole. I don't know, this is a very long flag, and some might say it's invalidated itself, but let's just say this bearish flag, bear flag is still intact. Where could the projection be? It's going to be putting us right around where I was suggesting on the 300 and 400 week moving average. So if this is where we draw the flag breakdown here and draw this out a bit farther like that, puts us right down around that 14,000, 15,000 range. Yet some people, well, it depends how you draw the flag. I mean, the break could also put us down around 12,000. There's a lot of ambiguity down in here, but the 400 week moving average is 12,500. Okay, so there's this is a sloppy bear flag, but it's definitely not a bullish pattern. We definitely want to watch this on the 4-hour, see if it can hold right around this 22,000 range. If we start breaking lower, I've had this question mark up for days. If we start breaking lower below this 21,000 and we breach this level 21,000, this recent low back here from a couple days ago, I'm sorry, July 25th. So then, then it's look out below. Then 20,000 breaks. Then we've got some issues here. Then we'd be looking probably at 17,500, 17,800 is that 300-week moving average. And then below that, that 400-week moving average, which we've never hit before. We did spike down to the 300 EMA or 300 moving average in the COVID crash and bounced hard off of that. And the 300-week moving average, sorry, the 400 would be down around 12,500, as I mentioned. Depending on when we hit it, it's in an upward trend, so maybe 12,500 to 13,000 potentially. This is where things get really nasty and ugly. And in the range of, we still have in the cards, the psychological support of 10,000. But if that breaches, there is still a CME gap, which is right down in this 97.50 range. So I don't know. I don't know, guys. It's really tough to say. And if we start seeing some major capitulation from powers that be, and starting to hit stop losses, liquidations, and another cycle of cascading downside, there's still quite a bit of liquidity in these markets, and the sellers, there's a certain point where some of these leveraged sellers are going to have to start dumping. And so in that case, we could see potentially some more Three Arrows Capital type of events, companies failing, and that's where things get really nasty and ugly. So it's definitely not a time to be going long, not a time to be trying to catch the bottom. Forgive me for showing you this. This is a bit, it's just another look at the 1 hour, 4 hour. I do think we'll see a bit of a bounce here on the 1 hour here, but it'll be short lived. And I think we've got further downside into the weekend. So please be careful. And, at some point on the 4 hour, this is our vol index that once it does start to bounce, it's a great little indicator on the short-term time frame, but we want to pay attention to the macro and watch what happens here, because again, these failures where it can't get above the 21, can't stay above the 50 is early indication there's further downside. So this is what I'm expecting. Probably 17,000. I think that's reasonable that we head down to this range here, 17, 18,000. And that's so ideally, let me just finish with this. So if there's another indicator that would suggest that we have seen a bottom, but we could certainly retest it. So we really want to see that this can hold at this level. And actually, rather than draw it like that, I'm going to set an alert, because below here we've got big problems down below, and we want to be protected. You know, I'm not going to suggest shorting, although some of you may be doing some of that. Be very careful with leverage, not advisable. But this here, let me just edit this, because if we cross down below this 16,650, 628, whatever it is, you know, I'm going to change my alert here to not the 3 notes reverb, which is kind of a nice friendly beep, 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 but more of a this one here for 5 seconds, because this is sort of the sky is falling, and be careful. And I'm going to say BTC breakdown, and that's not someone I want to hear. Okay, but that's looking pretty. That's looking like what, I don't know, guys. I think we haven't put in a bottom just yet. So I'm going to leave you with that. And hope everybody has a great week here. I'll just flip on the camera one more time, and sorry for that little X cam thing. But hey guys, enjoying the videos here with you. Have a great weekend. Good time to, I guess the camera's not going to come back on for me. I hope you guys have a good weekend, and we'll know more here as of Sunday and next week. I do think we'll see some volatility here throughout the end of August, and then we'll start to see where the market really is headed here once we get into September. All right, everybody. Hope you guys have a good weekend, and we'll talk to you next week. Bye-bye.